Frank, you want to run us through your report
Okay,
then?
the first page is general operating fund. It's going to look like this. Yes, here it is. General operating fund. First of all, I've shown the beginning balance from the end of last month, and then the receipts that we received during the month of October. The big item in there, of course, this month is our tax draw. We've got when the September taxes are paid, then October's tax draw is very large because they prorate that out. So we have $491,000 for property taxes that went into the general fund. And then there's another $22,000 that's a utility levy that comes in. So between the two of those, we got a little over $500,000 in tax money this month. Then down you'll just see them listed. I think that's pretty self-explanatory. The foundation aid is the other big payment there. And then down towards the bottom of that category where it says management fund, that's kind of a sub-fund within the general fund. And the management fund is where we pay like unemployment, we have to pay that, insurance premiums, such things as that. It cannot be used for salaries.
So how do you get that as a receipt then?
Well, because we got district tax, there's a levy.
Okay.
Comes in from that too, the general levy and utility levy and interest income. That's the only three things we get interest in. We get income out of the management fund. So altogether we got $772,000 in receipts during the month. Then below that are the expenses, the operating expenses of $55,000. These would be the bills that were approved at last month's board meeting. And then the management expense, that was a payment on unemployment, the $38.78. And then our payroll for the month. Then the FICA and IPERS portion that the employer pays, and then the premiums that we pay for employee health insurance. So that totals $313,000, and then our ending balance in the checking account is $916,000. Then below that, I just reconcile it to the bank statement. It shows what the bank statement was at the end of October, that warrants that were outstanding, and then we have funds invested at the Iowa Schools Joint Investment Trust of $648,000, which brings us up to the $916 figure that's up above. Then in addition to that, we have two CD investments, one at American National and one at the Iowa State Bank, which total $250,000. And then over on the next page, it actually shows a total of all of those, a breakdown for the operating fund and the management fund, what's in checking, what's invested, and then the total of all the funds in the general fund. Then below that, I've just made a comparison to show where we're at compared with where we were a year ago and 2 years ago. So you can kind of see the trend on those balances. Below that, that's just a comparison for the ending general fund balance, and that's for the whole year. There was, about a year ago, we were going the other direction. Now we're kind of building back up again since we've cut back on staff and some of our expenditures, so we're showing an increase over where we were a year ago. Then about starting in the middle of the page is where the schoolhouse fund starts. The schoolhouse fund is actually two accounts together, the PEPL fund and the capital projects fund. And you'll see in the receipts there we get tax receipts, both the general levy and utility levy for the PEPL fund, and then we get the local option sales tax, and then interest makes up the other income on those funds. And the only expense there was $1,138, and that's a lease payment on the copiers that we had. So we have $630,000 in the checking account for the schoolhouse fund at the end of the month. And there again, when I do the reconciliation with the bank statement, we have $543,000 invested in the Iowa Schools Joint Investment Trust, which makes the total of $635.46.
So money safe there with the state and the condition that it's in.
Well, yeah. Well, I kind of keep an eye on that. It's supposed to be pretty secure because they can only invest in U.S. Treasuries and time certificates. There was a predecessor to this, was called Iowa Trust, I think a few years ago, that they didn't have those regulations on, and it got into trouble, and we had to wait for a while to get our money back, but we did get our money out of it. So. The next page then shows we have one investment in the schoolhouse fund, and that's money that's reserved for this roof repair on this building here. That's $400,000. And then it's broken out similar to the general fund. I break out the physical plant and equipment, which is the PEPL fund, and the capital project as to what's in checking, what's investment, and then the total of all those funds is in the right-hand column there. And then I do the same comparison as to where we are in October of 2009 to where we were 1 year ago and 2 years ago. And then the other page is just a listing of the outstanding warrants at the end of the month.
And the lines through here weren't supposed to be.
We had the line, yeah. When I looked at the bank statement, I missed a page of checks, and it had those 6 checks on there, and they were not really outstanding. They were paid, so I don't mark them off afterwards. So.
Okay. Are there any questions for Frank?
Another thing I'd like to say is one of the things that changed in the schoolhouse funds, this is the first year since I've been on the board, we made a decision last year to kind of shift our tax levy towards more under the general, under the general levy instead of under the schoolhouse fund general levy. And I think if I remember right, we used to collect $50,000 every 6 months more. So where this on receipts in October 2009, when it says district tax general levy, where we just collected almost $14,000 here last year, and every year prior to that on the board, it would have been more like $63,000. Is that close?
Yeah, we're authorized to levy $1. You can levy the 33, and then the voters have approved the other 66. But we voted or decided not to levy the 66, so we're still at 33 right now.
So, just that's the only other thing that I see that this happened. And part of the reason was because the prior board had seen how much money that the silo tax had been bringing in versus where we needed to put the money, and we kind of made that switch. So, just to point out to the board members that has happened.
And the silo tax is a one-factor or contribution to schools, and it goes into your capital projects, right?
Yes.
Okay.
That movement from PEPAL to general fund was through modified allowable growth for dropout prevention, which we'll talk about tonight. And that was the board's decision, was not to collect as much physical plant and equipment levy, but to shift that to some other uses that would still be taxed. It would be so that the general fund had access to the money for allowable expenses in dropout prevention.
Any questions? I help you guys understand. A couple more meetings, you'll just put them through the drag.
A couple of years. Still not on.
Okay. No questions for Frank?